Welcome back to the deep dive. Today we're putting NVIDIA, ticker NVDA, under the technical X-ray. This stock, I mean, it's more than just a leader, right? It feels like the gravitational center for, well, everything AI these days. So our mission is simple: get through all the noise, forget the earnings chatter for a moment, and just focus purely on what the price action, the charts and indicators are telling us. We're going to zoom out monthly, weekly, daily, because the charts are showing this fascinating technical tension right now. Okay, let's unpack this.
Right, that tension is exactly it. It's the core of what we need to look at today. You've got these two forces pushing against each other. On one hand, you have this just overwhelming multi-year momentum, huge bullish trend. But then you've got these newer, shorter-term warning signs popping up, cautionary flags. And if you only look at one time frame, one chart, you're definitely getting an incomplete picture. So yeah, our goal is to synthesize all that, give you the complete view.
Okay, let's start way out. The big picture, the monthly chart. This really tells the story of, well, a massive shift in tech since, December 2018. This stock has just consistently made higher highs and higher lows. It's not just a trend. It feels like a fundamental commitment to growth baked into the price.
Yeah, but what's really striking to me is how structured that growth has been. It's not just random upward movement. We've seen NVDA trading inside this remarkably clear ascending channel, like a technical roadmap for its dominance, and it's respected that channel so well. Touched the top trend line, 4 times?
4 times, yeah. And the lower boundary 3 times since 2018.
That kind of precision over 5-6 years, that's pretty rare, isn't it?
Extremely rare, and it's fascinating because that technical structure, it really validates the fundamental story. That channel starting back in late 2018, that lines up perfectly with the huge pivot towards data centers, AI infrastructure build out. So the channel sort of confirms that the underlying story is solid and long-lasting.
Yeah.
It gives us a really crucial anchor point. And we can see that long-term bullish strength confirmed technically too. The monthly price is way above the 21 exponential moving average, the 21 EMA.
Like the baseline trend indicator.
Exactly. And price is far above it. We're hovering around, $178 currently. The EMA is much lower. It signals real confidence, from institutional money.
Okay, so that's the long view. Rock solid channel, looks fundamentally supported, gives you that long-term confidence. But let's zoom in a bit. Medium term, the weekly view. This is where things get more tense, where we've seen some real drama this year, 2025. There were 2 big moments recently, structure-wise, that you really need to know about. First one was back in April 2025. Price came down hard, but found strong support, bounced right off a major demand zone from August 2024. That was around the $90 level.
A big defense. When a stock defends a key level like that, it shows there's serious buying interest just waiting underneath.
And then the second key moment, June 2025. The stock finally broke through and held above that big resistance level around $153. That had been capping the price for a while.
Right, that $153 break was significant, signaled a potential new leg higher in this medium-term trend.
And technically, the weekly chart seems to agree, right? Price is holding above its own 21 EMA as well.
It is. So if you just look at the price action itself, everything looks like a technical green light. Bullish. However, and this is a big however, this is where it gets really interesting. And it's why technical analysis is so crucial for spotting potential trouble ahead. Despite that strong price, that break above $153, the weekly relative strength index, the RSI, it's been flashing a pretty critical warning sign since March 2024, actually.
You're talking about bearish divergence, aren't you? Can you break that down for us? Because, price making new highs usually feels good.
It does feel good, but divergence is like the market whispering a warning in your ear. It means that while the price keeps pushing up, making new highs, the momentum behind that move, measured by the RSI, is actually weakening. It's failing to make new highs alongside the price. It's making lower peaks instead.
Okay, so like a runner setting a record pace, but their internal engine is actually sputtering.
That's a great analogy.
Yeah.
Exactly. Like their heart rate monitor shows they're losing steam even as they cross the finish line faster. So connecting that back to the bigger picture, the rally is still happening, institutions might still be buying, but it's happening with less underlying force, less conviction than before. The internal strength, the speed of the climb seems to be flagging, and that's an early heads up. Active traders have to watch this.
Because momentum often leads price.
Often, yes. Momentum can give up the ghost before the price actually rolls over. It sets the stage for a potentially higher risk down the road.
Okay, so that's the tension. Stable long-term picture versus this potentially weakening weekly momentum. which brings us right down to the daily chart, the immediate playbook. This is how we figure out the tactical moves, for the next few weeks, given that conflict we just discussed.
Right. And zooming right into that daily time frame, the stock's been trading inside a very specific pattern recently. An ascending broadening wedge.
Ascending broadening wedge. Okay, so that means diverging trend lines. Higher highs and lower lows getting wider.
Exactly. It signals increasing volatility as the price moves up, makes for potentially wilder swings, up and down.
And we just saw a really key move within that wedge pattern, didn't we? September 5th.
Yes, just recently. The price dipped down and found support precisely at a crucial demand zone, 163.3.
163 there, Lars, and it bounced upwards from there.
A clear bounce, which for now confirms the short-term bullish idea it held the line. And that 163 level, its importance right now really can't be overstated. It's the immediate floor. It is the technical line in the sand for the short term.
Okay, and is it holding above the daily 21 EMA too?
It is, yes. Currently holding above the daily 21 EMA as well, which also supports the short-term trend. But really, the whole bullish case for the next few weeks hinges on a $163 holding firm. It's the pivot point.
So we've got the long term saying buy dips, the weekly momentum saying, uh-oh, be careful, and the daily chart basically balancing on this 163 level. Where does that leave us? What are the main sort of technical scenarios that could play out from here?
Okay, two primary scenarios based on this ascending broadening wedge and that key 163 level. Scenario one is the upside case. If buying pressure continues, if we stay above $163, then the expectation, technically, is for the price to continue grinding higher within that wedge and test the upper trend line.
And where would that upper trend line target?
Looking at the current structure, that points towards the $195 to $200 range.
Roughly. And $200 is obviously a huge psychological number too. Big round number resistance.
Absolutely. Bound to attract attention and likely some selling pressure up there.
Okay, that's the potential upside. What about the risk? Scenario two.
Scenario two, the downside or risk scenario, is defined entirely by that floor we keep mentioning, $163. If the price fails to hold that level, if we get a decisive break, and importantly, a close below $163.
The immediate bullish structure is broken.
Exactly. It's invalidated. That kind of break would likely trigger more selling, stop losses perhaps, and the expectation would shift. We'd then expect the stock to retest the next significant technical support level, which sits a bit lower, around the $150 mark.
Got it. So $163 is the key.
It really is. For you, the learner, tracking this stock right now, you could almost ignore every other level for the moment and just focus laser-like on $163. Is it holding or is it breaking? That single price point basically dictates whether the odds favor a move towards $200 or if you need to prepare for a potential defense of $150. That's the immediate technical reality.
Okay, that really clarifies the current situation. So let's just quickly recap the X-ray findings. We've got this incredibly strong, fundamentally back long-term ascending channel going back years. That trend was recently reconfirmed with that big break above $153 resistance. Strong stuff.
Very strong long-term picture.
But that strength is being actively questioned, maybe undermined by that weekly RSI bearish divergence. Momentum is flagging, even as price made highs.
The warning sign.
And all of this current action, this tension, is playing out right around that critical short-term demand zone at $163.
Yeah.
That's the immediate focus.
And this whole analysis, I think, really highlights why looking at multiple time frames together is so essential. It's not enough to just look at the daily or just the monthly. Today, we saw a perfect example, didn't we? How those momentum indicators, like that weekly RSI divergence, that sort of quiet whisper, can often give you a heads up before the price action actually changes course.
Right, it's about anticipation, not just reaction.
Exactly. By combining the long-term stability from the monthly with the warnings on the weekly and the tactical levels on the daily, well, you're equipped to anticipate potential shifts much better.
It definitely provides clarity, especially in a volatile market like this one. Hopefully this technical deep dive gives you the knowledge you need to approach NVIDIA with a bit more confidence and understanding. And if you want more in-depth analyses like this one, breaking down the technicals, make sure you look up our Investor's Edge YouTube channel. Go ahead and hit that subscribe button. Maybe like the video if you found this useful. We'll catch you on the next deep dive.